Welcome to Mind Explorers episode 43, where we are joined by Mr. Blue, who we haven't seen in a while, but he missed his mama and she's back home from the Thanksgiving holiday.
That's right. A lovely holiday it was.
Yeah, so starting out this episode, let's talk about some things we're grateful for.
Yeah. Grateful I get to see my blue cat again.
Yeah,
It's always a good time.
he's a good cat. I'm
He's-
grateful that
He's turning into a good cat.
the family is healthy and happy and doing well, and everyone had a good time. And I'm grateful that we were able to host this year and had the space and
Yes.
the ability to put together a nice dinner. So
That's always a good time.
yeah, personal gratitudes, and then what do you have? I have a couple of business gratitudes.
Yeah. As always, I'm always grateful for the team that we have at Burjax. It's a pretty amazing culture that we have. And, I get every quarter I spend a one-on-one meeting with each of my team members, and it's always the best part of the quarter because there's not always time to just sit down with somebody on a one-on-one setting.
Right.
And so I make time for that, and they make time as well. And it's just a great time to connect on a personal level and also just to check in to see how they're doing with just day-to-day life. How is your career going?
Right.
What roadblocks are you seeing? What processes can be improved? What ideas do you have? That kind of thing. And it's really just kind of an open format meeting, but I quite enjoy those.
So you do a one-on-one with everyone in the company?
Yeah.
Wow.
Even
Once a
Amanda.
quarter. Wow. So you have 4 meetings a year, at least, with every single person
At
in the
least.
company.
Yep.
Wow. And you plan on keeping that up?
Yeah. No, it's fantastic.
Awesome. No, it's a great way to stay connected. So you really know what's going on with everyone.
Yeah,
You're not
especially as
missing
we
out.
have more remote employees or
Right.
team members. It's really nice to be able to connect with them because always they work in a different department. I'm kind of doing other things, and so there's really no logical way for us to connect. So we just have to make dedicated time for it. But it's always been well worth the time.
Cool.
Well worth the investment. So
Cool.
that's one of the things that I am most grateful for is just getting to have that quality time with each of our team members.
I'm grateful for our clients giving us new challenges, pushing us to grow and expand.
Yes, they do.
Learn new things. Without clients taking the chance to hire us to go do new things we've never done before, would never grow and
Yeah.
get into new things. We'd still be doing the same things we'd always done. So
No, absolutely.
really
It's
grateful
always
for that.
awesome when clients want us to solve a challenge, even if it's like an offhand thing of like, oh, it'd be really nice if you could do this, and then it kind of gets the wheels turning and pushes us into a new direction, which can be really exciting.
Yeah, I'm grateful for the A players that we have that we've been able to attract with our culture and the company that we've built.
Yeah.
Because A players don't, as we've talked about previously on a few episodes, A players aren't necessarily just attracted to compensation. They're attracted to a combination of culture and things that excite them and the ability to expand their career and grow in new directions. And so I'm really grateful that we've got some of those A players that come in for that. And then
Yeah, I mean, you have to think of it like you are asking to take 40 hours a week out of someone's life. You might as well make it enjoyable,
Yep.
right?
Yep.
You might as well try and have as much fun as you can.
Well, and if they're not connecting with their work and feeling good about what they're accomplishing, the work feels like work.
Yes.
And it feels awful and it's hard and it's that, punch in, punch out, make it through the day, get through to the weekend kind of mentality instead of I'm really contributing and doing stuff that I like to do mentality. So
Yeah.
creating a good workspace is a big part of that. And then it's the right fit. Getting people who are actually excited about the work that they're doing. Not everyone's going to be excited about making maps or
Right.
doing land work or staking mining claims, but you find the right people who really love that kind of work, and then they will always put in extra effort because it's not hard.
Right.
Or even if it's hard work, it's not grueling work for them that they don't enjoy.
Right. They'll figure out how to tackle those challenges as they come.
So let's talk about lessons that we're grateful to have learned in life and business.
So many lessons. I'm grateful that we started learning from our lessons, because there's sometimes in life where it just like knocks you down and you just feel like you're just getting beat up left and right. And it's in those moments where you have two choices. You can either choose to let life beat you up and get you down and feel sorry for yourself, or you can say, I'm going to figure out what is the lesson here so I can move on from this challenge and get to the next one.
Right.
Because there's going to be more of those.
Always. Yeah.
So I think us just learning from those lessons and taking that moment and being like, oh, this sucks right now, but it's not going to suck forever, and then moving on is probably the best.
Yeah, there's something that I think about a lot, and that's that business is hard when you're growing and it comes with challenges. Business is hard when you're plateauing and that has its challenges. And business is hard when you're shrinking and that comes with its own challenges. So you always have challenges regardless. You just trade one set of challenges for another set of challenges, but there will always be challenges in life.
Right.
It doesn't matter what you're doing, there's always going to be challenges.
And a comfortable life is the worst challenge of them all.
Yep. Yeah, we've talked about that with the hedonic treadmill and things. Like,
yeah.
If you're too comfortable, then you will make problems out of insignificant things. And then when you eventually really get problems and you've lowered your tolerance of problems to where things that aren't even problems are problems, then when you actually have problems, you're going to be completely overwhelmed. So, yeah, and consistency compounds.
Yeah, you're telling me.
Being consistent, that's super important. That's a lesson I've learned over the last probably 2 years.
Yep.
I used to do like sprinting, the whole work hard, play hard mantra. Like, oh, I got a bunch done for a couple weeks. Now I'm just going to chill and party for a week. And then I find that it's like 2 steps forward, 1 step back.
Yeah.
But if I'm just consistent every day and do the consistent work, I end up much further ahead at the end.
And you feel better about it too.
It's a lot less of a roller coaster emotionally. Yeah, definitely.
Totally. I've noticed that too, just doing my 3 daily non-negotiables. It's just like my emotions are, I wouldn't say they're not like 100% in check, but I feel far more in control of everything I have going on. Because there are some days that are really stressful, but it's like this too shall pass.
Yeah, and you don't get to pick which days are stressful either. So it's not like you can just be like, today I'm feeling really good and I'm feeling in control, so I'm going to have a stressful day today because I can deal with it. Oftentimes the stressful days hit when you're not prepared and you're not in a good place to deal with them.
So you want to take care of your previous self, right, and put in all those things in habit so then your future self can handle it.
Yep.
Yeah.
No, I'm grateful for all those lessons. Let's talk a little bit about what's going on in commodities. So obviously sleepy week for Thanksgiving and the financial markets, but silver and gold dipped. We had a dip and they declined a little bit.
Right.
Not a lot, a little bit, and they kind of went sideways, but now they're resuming their super cycle upward. So silver's up about $57 an ounce. Gold is back in the $4,200 an ounce range. And copper is also rising, and all three are hovering around all-time highs.
Which is interesting because usually we don't see that.
Yep.
So in your outward viewpoint, what do you think is going to happen with these commodities in the next 5-10 years? Because all the signals are pointing that it's just not slowing down.
So we have gold and silver are climbing to all-time highs based on a lot of central bank buying. There's speculation. It's probably a lot more than speculation. It's probably the truth that China's central bank is buying 10 times the amount of gold that they're disclosing. So there's heavy central bank buying.
Holy cow.
Retail's getting involved. A lot of hedge funds and fund managers are rotating back into precious metals as a hedge because we have such an enormous government debt here in the United States and everywhere in the world. We have so much debt that there's a tremendous amount of demand for gold and silver as a safe haven and as a reserve currency to combat inflation and runaway debt. So we have that on one hand, and then copper, usually high copper prices coincide with lots of construction and booming economy because it's a very practical metal. People don't buy it to store it like gold and silver. They buy it to put into products and to use it. So copper is also booming, and they're two very different mechanics going on, but they're both happening at the same time. So they're not actually related. Copper's not running because gold and silver are running. Copper's running because of a long structural trend towards electrification and infrastructure and rebuilding the grid. And now piled on top of that, more recently, is all this data center and AI building that's going on. So this long-term electrification trend that's been going on for a decade, but now in the last 5 years, we have this big data center and AI boom that's happening on top of it. So that's driving copper. Furthermore, supply is diminishing. High quality, easy to mine deposits are fewer and fewer. Mines are getting deeper. The ore bodies are getting more complex. And so copper is just becoming more expensive to produce. So there's nobody who can really come on the market now and just flood it with cheap copper and drive prices down. And discoveries are much, much smaller and much, much harder to get to. Like Resolution's been known for 50 years now, but now the economics really make sense to mine it. Massive deposit, but it's 5,000, 6,000 feet deep underground.
Right.
6,000 plus. So that's what's going on in copper. Then we have this gold and silver trend. So Deutsche Bank, who traditionally hates gold like most banks, they don't make money on gold. It's not something they can really monetize. They don't really like to recommend their clients buy it, but they do sometimes. They've raised their forecast to next year to $4,500 an ounce gold. And they published a range, and they think it'll go as low as $3,900 and as high as $4,900 an ounce.
Wow.
So, and that follows in line with a lot of other banks. Average consensus for next year is around $4,500 an ounce.
Interesting.
So we're just kind of at the start. There's lots of speculation now, not official bank speculation, but a lot of private speculation that silver will close out 2026 at over $100 an ounce, which could very much happen.
Right.
We see that silver to gold ratio getting extreme, and that may tighten up, and we'll see silver go to triple digits. At $57, there's some resistance around $60 if you watch charts and things like that. And once it breaks through some of that resistance, there's not a lot of ceiling above it. It can go quite a bit higher.
Interesting.
Yep.
Interesting.
Yeah, and then there's a lot of shakeups with the gold miners and silver miners still, M&A activity, lots of deals going on. Mines and Money in London. London Mining Week is starting this week. There's a lot of deals and activities going on there. And then still a lot of shakeup and activity at Barrick. A lot of speculation. Some changes on their board. So things are shifting around, but nothing really concrete or worth speculating over now. But we will see some sort of a plan come out of there. They have made a deal with the government of Mali to restart their mine there.
I saw that they released the Barrick employees as well.
Yep, which is good. So then they can resume their production. What a mess. And then they're committed to their giant project in Pakistan that's super expensive, very high capex, high geopolitical risk, but a massive deposit that Bristow was really committed to carrying on. And after Bristow's exit, there was a lot of speculation that they would drop that project, and the board has signaled that they're committed to seeing it through.
Interesting.
So, and another big copper gold deposit. Barrick's looking for ways they can incorporate copper into their portfolio while still being more of a pure play gold producer. they see the upside in copper in the long term. I mean, copper's got a 50-year run ahead of it. And it's not going to be a linear line. There's going to be a lot of ups and downs because obviously building these data centers and microchips and everything relies on a whole bunch of different things and not just copper. I mean, we still have to solve the power problem, as we talk about a lot, but yeah, they're trying to position there. So yeah, that's what's going on.
That's interesting. I wonder how that's gonna affect the junior exploration market.
Big shakeups at the top with the majors, and M&A activity and acquisitions and things always run down and affect the juniors.
Right.
When there's, let's say theoretically Barrick splits. Their North American assets go to one company, and say that stays Barrick. And their other assets split, and say they call it Middle East gold or Pakistan gold or whatever they want to call it. And they have two different companies. The North American company now is going to look to expand its assets. And so it's going to look to acquire juniors, do mergers and acquisitions, everything, because they'll both want to grow to be as big as Barrick was as one company eventually. So that North American split's going to look to acquire more North American projects, North American juniors. So they'll have a bunch of targets, and then the international arm will do the same. And so then you have two companies that are looking to make acquisitions versus one. Also, currently in the state that Barrick's in, any deals that they have going on are going to be in limbo. So they're looking at different juniors to acquire. They're looking at different M&A activity, things like that on a big level, but also smaller deals, individual transactions and things. And all that stuff's on pause right now until they figure things out. Get a new CEO.
How long do you think that pause will last?
Just a few months.
Yeah, I would assume by Q1 they'll have things figured out.
And once they've committed to a direction, then things will resume with the juniors. But it's not like things aren't moving with the juniors. They're moving.
No, they're moving.
Yep, they're getting a lot more interest. Their stocks are rising. I still think they're far undervalued compared to gold and silver, compared to the metals itself. But, once the earnings start releasing and they get juicier and juicier, and then should they choose to utilize those earnings to increase dividends, buy back stock, pay down debt, make smart moves.
It makes the whole industry a lot more attractive to investors.
Absolutely.
Yeah.
Yeah. So that's what's going on.
Start changing that mindset of like mining's a good thing to invest in and not just a risk.
Yep. Yeah. So, we're in a new commodity super cycle, no doubt.
Right.
We had a little dip there, which is completely normal. There'll be more dips.
What's your prediction on how long this super cycle will last?
So copper, I think we're in at 20, 30 years.
Yeah.
Maybe 50.
Long-term game.
Yeah. Gold and silver, I think we've got legs for 5.
Yeah.
But it could be 10.
It kind of seems like it's burning really hot right now, and I wonder if that's just going to keep going or just...
Well, I mean, that's what a bull market does, and it will have dips and it will pull back. I mean, it just did, right?
Yeah.
We got gold up to 4,200 an ounce months ago, and then it dropped and it's kind of treaded water and gone up and down, but now it's climbing back up again. And the more it dips and retracts and then continues its climb higher, and the structure remains intact, the more people will get interested in it.
Yeah. It is interesting. It does help drive a little bit of the overall junior market, but we see a little bit of that in our day to day.
Yeah, well, and it's the food chain, right? So the small juniors have no intention of putting any assets into production,
right?
In precious metals, their job is to find projects and prove them up, and then there's the mid-tier guys who take them from exploration project greenfield to feasibility maybe, or pre-feas, and they prove up some ounces. And then there's the juniors who produce, the producing juniors, which is a handful, and then there's the majors. And so once the money starts flowing down through that structure, it goes through all of it. And so you'll see that. But then there's just speculation too. Like you'll get outside capital that's interested in getting into mining. And so,
Oh yeah.
and we've started to see a lot of that. But that's also a place where we have to do some gatekeeping and make sure
Yes.
people know what they're getting into, and
Well, that's their
make sure
job.
we're taking on good clients who are
Yeah.
going to pay us and they're in it for the long run and they're not just looking to
Make
to
a quick
pump and
buck
dump.
and get out. Yeah.
Yep.
Yeah. Yeah. No, we're already starting to see that type of activity within just our own personal pipelines.
Yeah. Yeah, and they're strong and going really well, but lithium's starting to look attractive again.
Lithium's been an interesting ride.
Yeah, and we've seen a few cycles already. This will be the third we've really seen.
Yeah.
But we have a
anyone
couple.
talking about doing processing though in the U.S. specifically, or even the West?
Most everybody's making concentrates.
Right, and then that's going to China.
Yeah, but there are plans to make battery factories
Yes.
and refineries for lithium. But a lot of those things are on pause, and
Right.
they've all just been stalled because the prices have dropped.
Prices have dropped. China is very aggressive in that market, and they have been for decades.
Yep,
So it's not going to be a quick turnaround.
yep. And yeah, uranium's looking really attractive, and that's another 20 to 50 year bull market I see.
Yeah.
Yep.
So it sounds like we're going to need a lot of prospectors out looking for rocks.
Yeah, and they're gonna be using tools. They're gonna use AI.
Oh, hell yeah.
Yep.
Absolutely.
Yeah, they're
Yeah.
gonna be using AI.
I think now is a great time to start being a geologist, an exploration geologist. Because there's a group, I don't want to get too off, this will make a second episode, but just as a teaser for next time, we should talk more in depth about the gray tsunami and how that could affect the mining industry completely in the West.
Yeah, Gray Tsunami is kind of a teaser to add on to that is a large majority of the technical leadership in the mining industry, the senior geologists, engineers, a lot of the guys in the C-suite and the board and the metallurgists and the process engineers, they're all nearing retirement, and there's not a replacement
Not enough.
group. There's not enough, and so there's going to be a big gap, and AI is potentially the answer to a lot of that. But that knowledge needs to be passed from all of those people to the AI, and there's some knowledge that just can't
Some
do
of
right
it is
now.
just
Like the field.
experience. Yeah.
The field geology, like you can take 100 pictures of a fault and put it into an AI, and it might be able to recognize a fault, but is it going to be able to recognize a fault as good as a geologist who's gone out and looked at 100 faults or 1,000 faults or 10,000 faults in depth? I doubt it.
Right. No, we definitely need the human power. Absolutely.
Right. But that'll be next week's episode. We will talk about the Gray Tsunami.
We
That'll
will.
be a good one.
And how, for the younger generation listening, this is your chance to really shine.
Yeah, it's a great chance.
It's a huge opportunity.
There's a lot of talk now about how I read that 76% of Americans think a 4-year degree is not worth pursuing right now.
I can't blame them.
And I think that's not, thinking about it as a whole, that's probably true, but there are certain segments that it's really important. Like, I think a 4-year degree in finance or accounting, bag it. A 4-year degree in geology, I think would still have a lot of use, or engineering, because we still need a lot of that. We're a little biased, but there's some things that'd be really useful. But all in all, I think trade schools are going to be a lot more useful, and you're going to see a lot more people enrolling in them, and a lot of retraining. There's a lot of people with office jobs that are going to be replaced with AI who are going to be learning how to do trades. And they'll be able to make just as much money, if not more, but there's going to be some more learning they have to do. Yep.
Cool. Let's talk about that next time. That'll be fun.
Sounds good. And for the Gray Tsunami episode, maybe we can get Blue the Gray Cat to come back.
I mean, he is a senior.
He is.
Oh, hi. Good morning. All right. Well, with that,
Thanks for watching, We'll see you next week for episode 44 on the Gray Tsunami.
Mm-hmm.